All right, hello everyone. Good evening. Welcome back. Hope you guys are doing well. Got the chat on, making sure I got everything right here on the OBS. Could you guys make sure that you guys can see the S&P hourly chart, soon to be dollar, and that everything's coming through on the audio? Thanks, Matthew. Glad to have you, brother. Thank you, sir. Thank you, Kieran. Meme, thank you. Ahmed, hello, Dylan. Hope you are good. Crazy move on NASDAQ last week. Crazy move indeed. Crazy move indeed. Get used to that, brother. 2024 is going to be a wild ride. Looking forward to it. Absolutely. Quite a bit to cover on stock indices. And as always, we'll sort it out. So hope you guys are all doing good. Welcome back to another pre-market analysis. As always, we're going to sort out the price action using intermarket analysis going into the new week. Letting you guys know what I'm looking at in terms of expectations and targets. Finally got the markets moving around more than we've seen as of recently. So that's exciting. Starting to have the markets move. Again, easy to call targets when the markets are moving, right? So looking forward to that. Still plenty of opportunity. The year is very new and it's going to be just lovely. So let's go ahead and get into it. Ahmed, markets may be turning soon. Maybe something to keep an eye on, brother. Yes, sir. We'll sort all that out. Happy Sunday to our trading family. Tyler, hello, brother. Olawale, happy Sunday. Eslam, hello, Dylan. Rich, happy Sunday. Hope you're doing good, brother. Matthew, Eslam, Tyler, thank you. Why is the Adore training coming on its own page? LOL. Adrian. Appreciate you, Abraham. Gerald, thank you for your time. Pleasure's all mine, Gerald. Appreciate you recognizing that, brother. I enjoy hanging out with you guys here on Sunday. So let's go and get into it. Let's go ahead and sort out some price action for the week to come. Economic calendar for this week is relatively interesting. We have CPI on Tuesday. So that's the big thing to be mindful of. Outside of that should be a let me get the camera right. Outside of that should be a relatively clean week for the most part. So looking forward to getting some action and taking advantage of some opportunities for the coming week. Before I go into this, please do help us out. Hit that like button, show support, and again, keeps me motivated to want to come out here for you guys on Sunday. I guess I was having a discussion with my associate that's in charge of the marketing and whatnot, and he said we barely got to 100 likes on the last stream. So, I mean, if we're not able to get 100 likes, I may have to do these streams on Discord or on Zoom. But I want to keep coming out here on you guys, with you guys on YouTube. So hook a brother up and show some love. All right, let's go ahead and get into it. So monthly chart for dollar index. Make sure I get the questions on. DXY monthly chart. So looking at this small inefficiency here, this is what I took our attention to here as of recent. Last month, saying the market was going to want to draw up into that. Just as a short-term draw. Obviously, not a lot of range there. The market's in a longer-term consolidation. So I wanted to see how we traded inside that monthly inefficiency, and then we've seen a rejection. So that's why we were looking for lower prices last week, and that bias absolutely banked on foreign currency and understanding dollar. So seeing a lower pressure on dollar from this inefficiency. So as long as we remain below that on a monthly basis, we may need to run into the sell side here and here, and that's what I'd be looking for within the next few weeks. Obviously, we're going to refine this as we go through the time frames, but based off the present structure, what I'm seeing, we're likely going to see the market want to run lower. All right, so weekly chart, market traded higher into this range, high to low, trading into a short-term premium. At the premium, we have buy-side liquidity, we have this inefficiency, and then we have this up close candle. So that's why I have it just labeled fair value gap and bearish order block, because that's what we have here. So hit that level, unable to sustain these premium levels, and then the market's breaking down. So seeing how we were unable to get steam on the upside and that premium arrays were acting as resistance in the lower time frame, those were the indications in institutional order flow that allowed us to confidently call discount targets and call dollar lower in the previous week. So looking at the weekly chart, we created this swing high, market's trading down into this range, and we have an inefficiency here. So that's going to be my downside target on the weekly chart, will be this fair value gap here. If we get animation down through that level, we have the rejection block, which is just the lowest body, the midpoint consequent encroachment of this wick, which is just the midpoint of a wick, and then we have the low. So if we get animated on the downside, those are going to be my downside targets on a weekly chart. So again, I'm not saying we have to cover all this range this week. Those are targets I'm looking for on the downside, obviously, unless something changes. But as always, again, since the markets are moving, we're going to start sending more updates and keeping you abreast as to what we're looking at, and make sure you have our opinion every step of the way. So moving forward, looking for lower prices on dollar again, as long as we continue to see that bearish institutional order flow into key discount levels. All right, daily charts. If you guys remember last week, we left off discussing this inversion fair value gap here, saying that this is a key premium level. Market was rejecting that. And I shared that as long as you remain above this candle's high here, we were likely going to see lower prices into the sell side here and here. And that delivered beautifully. So nice market maker sell model, second stage distribution here. Potentially setting up a larger fractal market maker sell model, which is what I'm anticipating. So with where we left off last week, we get aggressive displacement down through lows. So we're seeing bearish order flow. So what I'm going to be watching going into the week will be the fair value gaps above market price. This would be a mitigation block in here. So we have mitigation block, fair value gap. So the market can trade higher. Monday going into Tuesday. And then I'd like to see some type of higher week for Monday going into Tuesday inside these premium arrays. Prefer to see this one not filled in, because if we get this one not filled in, then that'd really warrant a run lower. So I'll be watching that in order flow. If we trade above this inefficiency and stab into this one, that's not a problem. That doesn't invalidate the bias. I just prefer to see it left open. So that's what I'm going to be looking for going into this week. So again, Monday, Tuesday, potentially set up the high of the week in this premium array, and then get a sell-off for continuation. What would invalidate that bias is getting above these two inefficiencies here. So if we get above this inefficiency here on a closing basis, then I'm no longer bearish dollar. So that's what I'm going to be watching for moving forward. All right, so hourly chart. Saw a nice range expansion lower. So as we saw continued sell-off in line with the analysis we shared with you guys last week, all you have to do is just wait for a discount in foreign currency and buy it. Manage risk, pretty straightforward, right? So that's what we gave you guys last week. So we're looking for a lower dollar. And of course, we're going to see rallying on currencies. Going into this week, this is that daily fair value gap. So just make sure we have our bearings. So we have the daily fair value gap. So what I'm going to be watching will be how we trade in this fair value gap. So what I'm expecting right now, based off the current structure, would be the market run higher, give us a turtle soup, false break above the highs, and sell off from the daily fair value gap. That's what I'm looking at in the present structure. What would change that is if we get above this daily fair value gap and start displacing on the upside. Keep in mind that it is CPI on Tuesday. So there could just be an aggressive repricing, and we could be significantly higher or lower than this. And then when that happens, again, I'll just have to get in line with what the market's showing me. But again, for right now, we've seen a market overextended on the downside, short-term retracement. So now we're in a range from high to low. So I'd want to see how we trade inside a premium of this range. See if the market gives a willingness to break down above these highs and inside that daily fair value gap right here. And then that's what I'm going to be looking for on dollar. But again, open to change, right? If the market ends up showing me signatures that it's not bearish, right, and we trade in this level and keep displacing higher, well, then that's not a very bearish market, right? But if we trade up into this level here, break down, shift market structure, trade into a fair value gap and sell off, that's what I'm going to be looking for. So some type of breakdown here from a premium. Again, for euro, pound traders, just flip the analysis and it's money. So it's just about tailoring it to whatever asset class you're trading. All right, so that's about it for dollar. Let's go to bonds. So beautiful delivery on T-bonds last week. We were looking at the swing low here that formed on the weekly chart. So after we formed the swing low, candle number 4, it really gives you an easy bias just because we get the swing low. It's highly probable that candle 4 is going to be an expansion in line with the recently created swing low. So after we formed that swing low, we were looking for a premium and just for this candle to expand higher. While I was saying the structure wasn't very clean, the confirmation here was looking for higher prices, especially as we looked at on the lower time frame. So moving right along into the daily chart, market traded down into the sell side. So we called this move out here on the daily chart. So there we have sell side liquidity, equal lows here and here. Market traded down into that. We had a stop run, qualified that to you guys last week. Down close candle, bullish order block here. So I told you guys, as long as you remain above this weekly, so the gray rectangle is just this weekly fair value gap. And remember last week I was saying, if we're going to be bullish, we'd have to stay above that, right? And use it as support. Hey, Carla. Hope you're doing good. Anthony, y'all should show some love. Hit the like button. If you don't like the content, why watch? Yeah, Anthony, it's not always malintent, brother. Sometimes people are just busy soaking up all the knowledge and they forget to hit the like button. No stress. No stress. So weekly chart, that's that weekly inefficiency that I was sharing there. So last week, I left you guys off with, if we're going to be bullish, we should stay above the weekly inversion fair value gap. So we opened on Monday, trade down, create the low of the week, find support inside the key level, and 2 down close candles, bullish order block. I was telling you guys we should rally from last week. Then gave you guys the target to the buy side here, and this inefficiency, and the market nailed that. So what I'm looking at right now in this present range from high to low, we've traded into a short-term premium. So I'm going to be gauging the order flow to determine whether or not this market wants to continue higher or whether we're going to see some type of sell-off in premium. If we continue to see lower dollar, we will likely see higher bonds. So this was an inversion fair value gap here last week, right? It's logical if I'm calling the market here, this fair value gap is probably not likely going to facilitate a sell-off. It's probably going to use it as support. So now that we reach these levels here, I'm going to wait. I'm going to sit on my hands and let this market show its hand to me. So do we sell off from premium and break down? Or do we keep trading higher and make a run for the buy side here and here? That's going to depend on how we trade inside this fair value gap and last up close candle. So if we trade up into this and we start selling off, that's not that bullish. Whereas if we start closing above this fair value gap, we start trading deeper into this last up close candle, then that would give me the confidence in the order flow that we're likely going to reprice to the high here and here. And then if we get that upside move on bonds, which is what I'm favoring, then we're likely going to see that sell off on dollar as our analysis is calling for in the current structure. All right, so that's it on bonds. Let's take a look at the yields real quick. So looking at yields last week, left you guys off with trading into the weekly fair value gap. So we trade up into that. Let me get the mouse on. The weekly fair value gap in here, and then we created a swing high. Trade up into the fair value gap here, created a swing high, and then same thing across all the yields. So with that signature, right, seeing the swing high form in a premium inside of a higher time frame PD array, that gives me a relatively easy bias for yields, right? And remember, we called this weekly candle lower. So further looking at the daily chart, if you guys recall from last week, I told you guys we're trading in a range. You can define that range from low to high. I told you guys we'd see the market when it pulled down into a discount. So we got that across all the yields, and that's why we saw lower prices on dollar. That's why we saw higher foreign currency. So it's a relatively simple, easy ebb and flow to follow. From a currency perspective, it's not going to be as one-to-one with indices, but it absolutely is helpful as confirmation. So looking at the daily chart here, we've traded down into a short-term discount. Now, again, same thing as we just saw on the T-bonds here. Same thing. We're in a discount. Now I want to see how we trade here. Do we trade into a discount and go higher? Or do we keep selling off and reach for the relative equal lows here or here? That's what I'm going to be watching moving forward on yields. But as always, since we have these markets moving now, if you are a currency trader, if you are following dollar, very important to look at the yields and understand bonds and their relationship with the currencies. Dylan, if you look at the daily chart on yields, market using volume imbalance as support, would that be valid? Yeah, Ahmed, that's a good question. So looking at the volume imbalance here, that would be a great target, right? So last week we were looking for lower prices, and then we've reached that target. So just as any discount array, you could absolutely use that as the key level to gauge order flow, right? So if we find support here and start showing a willingness to rally, displace to the upside, then that would be bullish, right? But if we break down through it, use it as resistance, start to sell off, then that would give us the indication it needs. So what it does, how it's going to show its hand, is fine. So it's all about seeing how we trade at those key levels, engaging the order flow around it, and that'll give you the insight for the showing of the hand as to where it's likely to reprice to as a result. Hopefully that clears that up for you, Ahmed. Yeah, absolutely, brother. That's what we're looking at on bonds. Go again to E-mini S&P. So ES here, we've been on a massive repricing higher, just on a tear as of recent, right? And we've been trying to stay away from calling the top in this market. Many have been trying to call a top, and it's really hard, right? Just keeps pressing up into all-time highs. So again, calling a top is a loser's game. I stand by that point. When the top's in, it's going to be in, but as for right now, you just have to trade what the market's showing you. And what it's showing us, we'll get into that now. So weekly chart, we have a down close candle here. Market dug into that last week, use it as a springboard, and then we traded down into it again this week, but it's still showing relative support. So based off the weekly chart, right, as always, you guys know I'm not going to leave you off with 50-50. We're going to refine it all the way down into an intraday chart. However, understanding the weekly chart, it's helpful in having a higher time frame perspective, because how many times on like an hourly chart, like for example, every time the market gives some type of retracement to continue higher, everyone's always trying to look at this as a short or 2022 model. But if they're in a buy program, if they're going to keep repricing this market higher, you don't want to be on a 1 hour chart looking at every single break in structure as a top. You know, we really want to stay away from that. And the reason I bring that up here is because on an hourly chart, on a 15-minute chart, it's easy to see these drops and get all excited. But when you have your bearings on a higher time frame, it helps take away the excitement, right? It's really easy to see it's bullish, right? We want to stay away from calling the top. So as I was saying, down close candle here, bullish order block. Market dug into that twice, and we're still using it as support. So on a weekly chart, I'm bullish as long as you remain above that. If we break down through this down close candle, then that would likely indicate that we're seeing some type of intermediate term high in the marketplace. But until we start showing weakness, until we start showing bearish order flow on a higher time frame, I'm sticking with higher prices, right? Avoiding calling a top. But again, we'll refine that as we go through the time frames and refine it into the fine details on lower time frames. But again, down close candle, if we're above that, I'm bullish on a weekly chart. So very straightforward there. Daily chart for E-mini S&P. So if you guys remember last week, we were looking at this down close candle, that bullish order block. Told you guys that would be like the last line in the sand for me to be bullish. Traded into that, bodies respecting the opening price of that order block. Bodies respect that, and then we get continuation higher, right? So again, on every single retracement, someone's always trying to pick that top. Really difficult game to play. So we just continue looking for buy models. Seeing the daily fair value gap, we see the market staying in the upper portion. Staying in the upper portion, bodies respecting the opening price, swing high, buy side liquidity, right? There's buy stops above that, market rips into that. After taking out the high on Friday, though, we did get an aggressive repricing lower from those levels. But as for right now, down close candles are still supporting price, order flow still bullish. Yeah, we'll refine it on the lower time frames from here. One thing I am noticing, some of my observations, again, while I am avoiding calling a top, I have to take what the algorithm's giving me. And what I'm seeing here is we're seeing anemic runs above highs, right? We see when the market is very bullish, look how highs are traded through. There's just aggressive displacement through it, right? Short-term high right here, displaced through. But what we're starting to see now is the market take out short-term high, short-term high, short-term high, and do it in an anemic way. So are we seeing potential offset distribution at premium to then start rotating lower? That's a possibility, right? That's a possibility. However, I'm going to have to take it day by day. And when we're at all-time highs, I keep looking for higher prices. I keep trusting buy models until they start failing me. However, these signatures and order flow is something I'm going to monitor, because another thing to keep in mind is that we also have a divergence here at the highs. So Dow is not in agreement with S&P and NASDAQ making higher highs. So if we see the SMT holds, if we see down close candles being broken through, and we start seeing bearish market structure, then that would be a reasonable time to call a top. But until we get to that point, again, I want to stay away from that. But those are all things to keep in mind. Those are all things I'm monitoring, and then I'm going to be watching moving forward. All right, moving right along, hourly chart. Just breezing through this one today. So market drops down early in the week last week, making that Tuesday low of week. Here, leaving relative equal lows. So I don't think those relative equal lows are going to be there for very long. If they keep repricing it higher, then they could be there for months. But I don't think they've left those equal lows there for very long. And we'll go ahead and unpack that in the recent structure that we're seeing. So just to recap, Tuesday low of the week, displacement higher, market trading back down into 2 down close candles. So that'd be our bullish order block. Buy side here, and then we got aggressive displacement on the upside. Above the buy side here, we took out that all-time high on Thursday. Friday, short-term low, they took that out, took it higher, and this created an SMT. So SMT there with NASDAQ indicating it's going higher, right, into the equal highs here and here. So I had more confidence being bullish Friday just because NASDAQ still had the equal highs. And so again, typically a market's not going to top with an equal high here and here. So that's why when we shared the analysis in Telegram into our Discord community that we were looking for the buy side here, that's why. Yes, S&P had already took out its high, but NASDAQ left equal highs, right, to run on that sentiment in non-farm payroll. So then looking how we traded above that high, that's what I want to take our attention to here. So Friday, the market traded higher. So we're pressing into new all-time highs, albeit anemically on the daily chart. It's still trading higher. After doing so, we then broke down aggressively through an intermediate term low. So what I'm going to be watching going into this week for order flow on the lower time frame, we have an intermediate term low broken to the downside. We have a bearish breaker, and we have equal lows. So what I'm going to be monitoring going into this week here, if we're bullish, it's going to trade into discount here and just keep rallying higher. And then we'll violate the breaker, violate the fair value gap, and that's fine. Because then that'll tell me the market's bullish, we're looking for higher prices, and it invalidates it. But if we remain below the breaker and below this fair value gap in here, this breaker and fair value gap, if we remain below that, we're bearish. I'll look for Friday's low, this inefficiency here. And then we have the sell side equal lows as targets. Only if we remain below the breaker and fair value gap. However, if the market gets above that bullish breaker, or bearish breaker, excuse me, if we get above that, above this hourly inefficiency, then we're bullish and these equal lows are not going to be traded to. So it's a matter of that confirmation. So while yes, I'm avoiding calling a top, while yes, I'm avoiding looking for lower prices long term, I have to trade what the market's giving me, right? And we were bearish here early in the week on Tuesday. And then I was bearish on Friday after the reversal, right? So you can still go short. You can still look for lower prices. It's not to say you can only be a buyer. However, in terms of the higher time frame, right? Imagine trying to short that weekly chart, or imagine trying to short the monthly chart. You're asking for really hard trading. So with all that to say, this is what I'm looking for in the lower time frame, and that's how I'm going to validate what I'm seeing on the higher time frame. So if we remain below the breaker, fair value gap, lower prices. Very simple. If we get above it, then I'll look for higher prices based off that. So it'll be interesting to see some type of sell-off here into the relative equal lows for S&P. We'll go to the NASDAQ, take a few questions, then I got to get going. Fortunately, didn't hit my cardio this morning, so got to get my cardio in after my chest and shoulder day. So got to go get my lift on, and since it's Sunday, gym closes at 7, so looking to keep this one brief. Swing high on the daily chart after trading down into a short-term discount. Actually, let's start from the weekly chart on NASDAQ. So here we have this down close candle on the weekly chart. Market dug down into it, but it's still doing what, right? We still have down close candles supporting price. So I'm not calling a top on the weekly chart. What would make me bearish on a weekly chart is seeing us get through this down close candle. If we violate that, this market's likely going lower longer term, and we have some type of intermediate term high priced in. But as long as down close candles, inefficiencies, down close candles keep supporting each other, I'm looking for higher prices. But again, I also gave you guys the invalidation, right? So if we get below that, then that would shift my stance on indices. So as I was saying on S&P, really a lot of the same things, right? We're taking out the highs, but we're doing it in an anemic, with anemic runs with lack of displacement. So seeing that we're seeing potential offset distribution, which is when the market runs short-term highs, facilitating distribution for smart money. That's what we could potentially be seeing. So looking at this high here, how we traded above this high, trade above it, and then an aggressive breakdown, right? So aggressive breakdown, this inefficiency here, which all I'm taking your attention to is the daily fair value gap. So this range here of that inefficiency, closing down through that. So we have equal lows here. As long as you remain below this purple rectangle, as long as you remain below the daily fair value gap, I'll expect this to act as inversion and then see us reprice lower for the equal lows. How we trade there, I'll have to see. If we reject the lows and keep repricing higher, then the market's still bullish. If we trade below the lows and start displacing down through it and start breaking down aggressively, then we'll likely see a run into these equal lows as well. Only if we accelerate through these. But again, because we're at all-time highs, because I'm avoiding calling a top, whenever I am bearish or short-term bearish, I'll just call short-term targets and just take it day by day, right? I don't want to give you guys targets all the way down here and say we're going to refill this inefficiency because, you know, you just like Chicken Little calling the top, calling the market crash every week. And again, we really want to stay away from that. When the market top is in, it's going to be in. But until that point, we just have to trade the underlying order flow. All right, moving right along. Hourly chart. Market traded into the buy-side liquidity here on Friday. Equal highs, and then an aggressive breakdown. So key low here, intermediate term low taken out, and then we trade through it with aggressive displacement. All right, so an animated run lower. And now we have the equal lows here. So same thing as dollar, or same thing as S&P, excuse me. How we trade in this range that we're in is going to dictate where we're going to go. So aggressive breakdown through the low. So potential buy-side run, breakdown, kind of think of it like 2022 model, which is just a shift in structure, retrace the breakdown. So that's potentially what I'm looking for on NASDAQ. But again, understanding this daily fair value gap that I showed on the daily chart and how influential that level is. So as long as you remain below that, shouldn't get above the breaker here. So as long as you remain below the breaker, fair value gap, I'll be looking for repricing into the equal lows here on NAS. And then how we trade there, I'll have to see what we do if and when we get there. And then that'll give me the insight that I need moving forward. Yeah, so pretty straightforward analysis today. 431, doing good. I'll take a few questions. I'm going to bounce on out of here, keeping it short and straightforward for you guys going into this week. Anthony, is there a particular time for the New York Silver Bullet for Forex pairs? Since that of indices is 10 to 11. So for Silver Bullet, Anthony, everything that applies to indices is going to apply to Forex, unless that's to do with the PM session, because there's obviously not a lot of movement in the PM session for currencies. But in terms of the London Silver Bullet, which is 2 to 3 AM session, or no, sorry, 3 to 4 on this one, 3 to 4 in London. And then in the New York session, there's a Silver Bullet from 10 to 11. But there's actually even more Silver Bullets than that. But that's a general rule of thumb. That should serve you well in the Forex market as well. Yeah, appreciate it, Anthony. Show some love. Hit the like button. Thank you very much, sir. Dylan, if you look at the daily chart. Yes, sir. Covered that. Gene, your streams have proven to be useful to me on my trading journey. I went ahead and hit the like button. Thank you, Gene. Appreciate the feedback, brother. Glad it's helpful. Islam, can you please explain why bonds and yields affect dollar? Ahmed, dollar is a currency. It is going up or down because countries are investing in yields and bonds. When yields decrease, people take out dollars, thereby weakening dollar, vice versa. Great explanation, Ahmed. And if that doesn't do you for you, Islam, A simple Google search, understanding the relationship between bonds and their respective currencies, that should point you in the right direction. Gene, higher time frame is key. Yeah, higher time frame is everything, brother. Absolutely. Without the higher time frame, the lower time frame doesn't make any sense. Chris, 100. Yeah, looks like we got it up to 100. There we go. Nabil, I'm waiting for SSM on the daily if the data range, 40 days look back, looking juicy. Yeah, definitely. Yeah, something to consider, Nabil. You know, if we get continued acceleration on the downside, we see rejecting highs and we see bearish order flow, then, you know, the look back is going to be very helpful. But one thing we want to keep in mind is, you know, a lot of people have been trying to use a look back for like, you know, the past 2-3 months. And it's really hard to call lower prices when the market's bullish. So just something to keep in mind there, brother. I wouldn't want to see anyone get hurt trying to call a top. So just something to keep in mind there, my man. But definitely, if the market does show weakness, then there's a lot of sell side to be run into. So I prefer to see the market sell off because then that would give really nice, easy trading within a range. Mad, health is wealth. Absolutely. There's no wealth without any health, brother. Gene, getting both the PNL and the gym gains. Yes, sir. Mandatory. NASDAQ ran to fill its previous day's opening range, gap close. I'm really glad you bring up the gap close. Thank you. Nah. Look at the regular trading hours. That was the last thing I had. Abraham, appreciate you bringing this to my attention, brother. Looking at the hourly chart for NASDAQ. Almost forgot. If we start to sell off, as I was saying, you guys know, looking for a sell-off from this range. So if this is going to be an intermediate term high, we can retrace and then sell off for the sell side. But what would be beneath that for a target to reprice into? Well, we have the sell side here, but also look at the regular trading hours. There's a large void here. So if we get down to that low, we'll likely want to dig into this void. So that gives us a nice range to trade and look to attack going into this week's trading. And then also looking at S&P, equal lows on regular trading hours, and then we have a large liquidity void here. So if we do have an intermediate term high in the marketplace and we get that confirmed with the bearish order flow, then we could absolutely see a run into the equal lows and into the regular trading hours void here. So lots of opportunity in the coming week. Appreciate that, sir. Matthew, thoughts of time and seasonality? Is it the second week of March? Key lows are usually put in around this month. Yeah, Matthew. So seasonality is very important. And as we start to progress through private mentorship, I'll have much more on seasonality. But remember what I touched on in one of the recent streams? Tools like seasonality, COT data, SMT, we use whatever the case may be. They're helpful within the right context. But keep in mind, they're just tools. A lot of people have been trying to do what? Like if we look at the daily chart, when markets are at all-time highs and it's trading just parabolically higher, seasonality isn't as much of an influence. So understanding seasonality, if the data ranges, right, cast forward, look back. You know, I've seen people trying to do cast forwards cast back every single week, trying to look for lower prices. So those tools are helpful. At all-time highs, though, at trading at all-time highs, those tools aren't as useful. Not to say they're not to be considered, not to say they're not helpful, but when a market's at all-time highs and market makers are repricing it higher, if central banks want to see S&P at 5,000, they don't care about COT. They don't care about seasonal data. They're repricing it higher. So I say that to say, Matthew, that while those tools are great, while they're great to use as additional confirmation within market structure, within order flow, take it with a grain of salt, especially since we have markets trading at all-time highs. If we see further aggression for we sell off, could we see this as a higher time frame manipulation, lower to shoot us off higher? Yeah, that absolutely could be. Taking it day by day, not looking too far into the future. Could this be a sell-off to then continue higher longer term? Absolutely. We don't need that type of visibility as traders. Again, it's just taking it week by week, month by month. But once we start to get market structure cleaning up in terms of indices on a daily, weekly chart, instead of just going parabolically higher, we'll definitely have more clarity to start implementing a lot of those tools, Matthew. Hopefully I covered your question, Matthew. There. Do you also consider the 4 p.m. Thursday wick to be a breaker? Yeah, you could use this. It depends on the structure you're looking at. On an hourly chart, I'm just looking at this high to this high to this higher high. So it'd be the lowest down close within that range. If I was looking at like a 4-hour chart, it's not really that clear. 2-hour. Let's do a 2-hour. All right, there it's cleaner. If I was using like a 90-minute chart and on this structure, on this time frame, then this would be the breaker. So it just depends on the time frame you're trading and what you're calibrating it to. Do you look for market maker models on a weekly basis? Ali, good question. Yeah, market maker models I'm looking for on everything I'm trading. Every time frame, every price run in the market can be qualified as a market maker model. So it has a lot of applications, I guess is what I'm trying to say, and not just, for example, a weekly basis. I'm using it across all time frames because it's a universal model. Just like it forms on a weekly, it's forming on a 5-second chart, right? It's just a matter of what time frame you're analyzing. The analysis is the same across all time frames. It's just the top-down analysis that's the key, which is doing it in a structured way. Bro, you and Justin, you're the best. Appreciate it. Thanks, man. Matthew, what's your CPI operating procedures? We'll cover that tomorrow, sir. We'll cover that tomorrow. Gene, how do you determine when it's best to stay out of the markets and not to make any trades? What are the key indicators you look for to avoid unnecessary risk? Yeah, that's a really good question, Jonathan, or Gene, excuse me. That's the $1 million question, right? How do we avoid low probability? How do we just trade the best days? And, my answer to that would be understanding your economic calendar, right? The day before CPI, the day before NFP, the day before FOMC, understanding a large range day. We're typically going to get a small range day after. If we have a large run in London, we're likely going to see a small range New York session. If it's a day after a bank holiday, we're likely going to see a sloppy AM session. So that should give you a decent start, but there is a lot to consider in terms of market structure, time of day, and all those different things, time of year. There's a lot of things I have to cover to understand that. So what I gave you is a start, but there's a lot more layers to it that, again, I'd be here for a long time explaining it in terms of what constitutes high or low probability. Because there's a lot of different things you have to consider in terms of market structure, time, all different things to be considered, Gene. But what I gave you should be a good start. Adrian, contract roll. Yeah, as far as the contract roll, barchart.com, wait for the subsequent contract to have higher open interest. And then once we have higher open interest on the subsequent contract to come, then that's when I'll start trading it. That's my protocol. That's what I do. Everyone has, what works for them. But I want to trade the contract with the most liquidity in it. And as for right now, that is the NQH, or the March delivery contract. I'm assuming this week will roll over, but I'm trading March contract until we get higher open interest on barchart.com. All right, guys, I think that's going to do it for me here. Top Step X, some funny business going on with Top Step X. Not sure. Gear, I was one of the testers. Thank you, sir, again for sharing my wins in the group. Yeah, Matt, look forward to seeing you killing it, brother. After NFP week, do we always need to avoid Monday trading? I'll put it like this, Islam. I'm not going to tell you what to do. I avoid Monday trading, especially after non-farm payroll. That's me now. Can you trade it? Market's open, but it's up to whether you want to trade it or not. Matthew, please answer questions, chat in the Discord. Yeah, I got you covered, Matthew. I saw that filling up this morning. and while I was getting prepared. So I got you covered this evening, Matthew. Appreciate the reminder, sir. Best of luck. Take care. Yep. See you, Med. Take care, brother. Yeah. All right, guys. Gene, thanks for the insights. Yeah, pleasure's all mine, brother. All right, guys. Well, I'm going to go ahead and get going. Hope you have a fantastic rest of your Sunday. Good luck and good trading this week. And we'll be back to business. Looking forward to it. And until we speak next time, good luck. Good trading. See you guys.